What's up, guys? Eric here. I want to bring you a quick video, bring you up to speed with three stocks that I'm buying right now. Before I do that, I want to share with you this is just an example of what I bought in April. This is not all inclusive by any means, and there are a ton of stocks not on this list, like Micron, ton of dividend stocks not on there. But if you bought any of these stocks in April, you made a ton of money, right? The Arista Networks, Astera Labs. I mean, Astera Labs went from being down big to up 25, 30%. We're up like 75% on Apple 11. Mercado Libre has ripped, 40% or something since the lows, maybe more. You know the story. You made money on these stocks. If you bought them, you want to know what's there to buy right now. And generally speaking, I like to buy against the grain. So when everybody was piling into growth stocks earlier in 2025, January and February, I was buying a lot of the dividend stocks for the new dividend portfolio. Now, of course, in this big sell-off, growth was getting hammered and I was buying growth heavy and I wasn't really touching much in the dividend side other than buying some Microsoft in the dividend portfolio. So now I'm buying a few different stocks. One of them being UnitedHealth, which is in the dividend portfolio. This is a $125,000 portfolio. It's a small position. It's about 3% of the portfolio. I bought some shares today. I want to bring you up to speed with what's going on because 2 days ago I made a video. I gave you the entire timeline of why United Healthcare is down, why UNH stock is being punished. It was down, almost 50%, and then a huge hit again last night. So the story changed significantly since I did that video a couple days ago. Last night, United Health now under criminal investigation by DOJ, possible Medicare fraud. And you can see this from the Wall Street Journal. UNH under criminal investigation for possible Medicare fraud. Not that long after this came out, UNH came out and said, hey, this is not true. So I'm going to find that for you. So this is UNH's response last night to this Wall Street Journal article. And they said that we have not been notified by the DOJ of the supposed criminal investigation reported. The Wall Street Journal's reporting is deeply irresponsible, as it even admits that the exact nature of the potential criminal allegations is unclear. We stand by the integrity of our Medicare Advantage program. Now, if you're a bear, of course, you could make the argument that maybe Wall Street Journal found out before UNH, or some people say that UNH knows, they just don't want to admit it. They're going to deny it. Of course, they're going to deny it. Here's the thing, guys. They're not going to come out and say that the reporting is deeply irresponsible if they know that something's going on. Now, if you follow the healthcare sector, you know that there are a lot of high profile cases out there, including this United Health Group, but there's Omnicare, Columbia, Cigna Group. You can see all the different ones on your screen. In 2023, the DOJ reported $2 billion in healthcare fraud recoveries. So I'm not saying it's good if something's going on. And of course, if they're doing something on purpose, this could get really bad. But I think it's important to understand the backdrop of this sector. Now, if you start digging into it, according to the sources, the Justice Department has been investigating the group in an open probe since last summer. So is this really the same information that we already knew last summer, or is it something new? Now, of course, on the internet, like on X, you're going to have people saying that UNH is the next Enron. Well, Enron cooked its books on purpose. Is UNH jacking Medicare Advantage to cook the books? And of course, that's what the bears are going to tell you, on purpose. If so, well, that's a big problem. And if you're buying the stock, you're going to get hurt and it's going to go much lower. Some people are saying, can it go out of business? Well, anything's possible. It certainly could go out of business. I don't think that's going to happen. And I'll tell you more why here as we go on. But if not, it's fine. And nobody remembers a few months later. There have been tons of DOJ cases where essentially a fine or a penalty is paid and people don't remember it a few months later. Think back to the CrowdStrike outage incident. Everybody thought that stock was going to go out of business, and that George Kurtz, the CEO, should be behind bars. A few months later, no one even remembered it, and it went to all-time highs. Is that something that's going to happen with UNH? Probably not. But if you're a long-term investor and you're thinking longer term, today's drop could be a pretty good opportunity. We'll look at a chart here in a little bit. Just looking at some history with UNH, they've successfully defended major legal challenges. I'm not going to read them, but you can see on the screen. There have been many other times that legal challenges have been defended by UNH. The thing about it that you have to remember is that this company has been doing the same thing for a long time, but it's in the public eye. It's under much more scrutiny today than it ever has been before because of the events that happened in December of 2024. So this is very much in the public eye. There's a lot of polarization between the stock, a lot of, bears and bulls, and a lot of people that just hate this company. And the sentiment is very, very bad. According to Grok, the investigation, while serious, was already known to the market, and no new reports surfaced on May 14th to directly link the after hours decline. Investors may be reacting to the cumulative impact of UNH, which we talked about Tuesday, and you certainly can go watch that video after this one to get a better idea of just what's going on. I don't want to go into this too deep, but a couple weeks ago, you remember this article here about the Tesla board. Now you got this response from Elon Musk on X. Extremely bad breach of ethics. Deliberately false article. And just a quick reminder, here's a list of major public companies that are being investigated by the United States Department of Justice. And of course, UNH is on that list, but you got Johnson & Johnson, Boeing, Wells Fargo, Facebook, Meta, Apple, Microsoft, Pfizer, Cigna, and more. Now, generally speaking, the sentiment's always, it seems like it's really bad or the worst when it comes to the healthcare stocks and the financials. But nobody really seems to talk much about, Facebook, Meta, ongoing antitrust investigations, Apple, active since 2024, Microsoft. Of course, you had this case back in 1998, 2001 that was settled, and Microsoft has kind of gotten out of jail free for a while on this. And there are many more companies that could be on this list. Now, that's not saying that if UnitedHealth Group is doing something bad that I support that, not at all. It's just to bring awareness that this is not the only company in the world that's under scrutiny by the DOJ right now. So in Discord, I spent several hours last night breaking all this down, keeping the members up to date with what's going on in real time. And I told the members that I needed to think about it and decide what I was going to do this morning. And then this morning, about 20 minutes before opening bell, I posted this in Eric's dividend portfolio on Discord and said, here's what I've decided to do. These are the limit orders above, and these limit orders filled. I actually added one as well. I broke down everything, gave full transparency of what I have in my current portfolio in the main, as well as this dividend portfolio. So at open, I bought a share at $275. I bought another share at $267.77, another at $257.77. And I bought 2 shares at $250. Now, somebody has spoken fun the other day and said, oh, you only buy 1 share at a time in the $1 million portfolio. No, I'm not buying it in the primary portfolio, the $2.6 million portfolio. I'm buying it in the $125,000 dividend portfolio. So after the buys today, it's something like 3 or 3.5% of that portfolio. And the position is red. That cost basis is going to be in the low 300s. And if you look at it, the low today was $248.88. So this was down something like 20% at one point today, now down only 10.93%. And just to be completely transparent with you, this is directly from my Fidelity account, UNH. It's 3.23% of this portfolio. I'm down 15.64%. My average cost basis is $325. But you can see it did bounce from that $248 level all the way up to $274, this purple or this blue line right here. So from here up to here, you can see that bounce. Now, the problem is you've got a gap down here and a gap down here, and that is pretty rare, especially with a Dow component. I mean, this went from $606 and literally just fell off a cliff from 606 all the way down here to $248 a share. Of course, there are risks, and if people start going to jail for fraud, well, the stock is going to get punished a lot more. I don't believe that's going to happen. That's a risk that I have to take with my money. I showed you what I own, and I'm comfortable with that. I might even add some more shares in DCA to get that cost basis lower. And I do own some in the main. It's a small position, but that is green. That cost basis is $213 a share. I'm confident if you're a long-term investor and you have conviction and you're buying this and you're holding it through the storm, you're buying that fear that you will make money. But I don't think it's going to be fast. I think you have to be very patient. This could take a while. It's going to need a positive catalyst. It could take an entire year before you see some profits on the stock. And if you're a trader, that just might not make sense for you. But as a long-term investor, I zoom the lens out. I think there's a good chance in the next 2 years, this is something like a $500 stock. So I'm buying UNH. And at the end of the day, you always have to do what's best for you and for your money. I also started a new small position in the community portfolio in another healthcare stock. Now, this is the risk. This is why the stock is down from the highs. President Trump executive order directs pharmaceutical companies to lower their prices to levels closer to those paid in other countries or face new regulatory actions, including export restrictions and tariffs. A quote here from Trump. I'm in London and I just paid for this damn fat drug I take. I just paid $88, and in New York, I paid $1,300. What the heck is going on? It's the same box made in the same plant by the same company. He described the conversation without naming the medicine. Well, it's probably going to be NVO or Eli Lilly. And I'm not a gambling man, But if I were, I'd probably put my money on Eli Lilly. So, of course, that is the risk. And the same thing with the last stock we just talked about, UNH. The share price could be impacted by any news that comes out. So, Eli Lilly has an A plus grade on Seeking Alpha for growth. You can see very strong growth numbers. Profitability is also an A plus, that gross profit margin 81.7%. But of course, if prices come down, those gross margins are going to get pressed and the stock is going to be impacted. Valuation wise, it's not a cheap stock, 33.68. That's a PE gap forward. But with that said, the PEG ratios 0.72 and 1.01, that's very strong. So it's growing into its valuation quickly. Eli Lilly does pay a dividend, has a safety score of A plus, dividend growth A plus, consistency is an A. The only problem is it's a small yield, 0.84% yield, 39% payout ratio, 15% 5-year growth, and 10 years of dividend growth. So this is a solid DGIF stock, and we just started a position in the community portfolio. And we started that position around $717 a share. You can see right now, post-market, it's $734 a share. On the recent sell-off here, April 7th, stock got down to $677 a share. At the very highs, which you have to go back to August 2024, it was almost $1,000 a share at $972. Most recently here, we had $935 in March of this year. And recently here, it rocketed from $677 in the lows of April all the way up to $902. And now it's fallen back down to that $700 level. So I'm a buyer of Eli Lilly stock here. I prefer it $700 and less DCA. And there could be impacts if any news comes out of the White House. For the third pick, I'm going to give you a rapid fire 2-for-1. The first, you could pick Nike. You can see it's trading at $62 a share right now. Recently it got down to $52. I prefer this stock in the 50s at possible, so a couple dollars lower than it's trading now, and always use dollar cost averaging. And the other option here is Target. Actually got down to $87 a share. It's at $97. I believe this is a buy, $100 and less DCA. Target pays you a 4.7% dividend yield. It has 5-year growth rate of 11% and 56 years of dividend growth. If you're new here, make sure you subscribe to the channel, smash that like button, drop me a comment. Thanks for watching. Have a great rest of your day. Take care.